Hello and happy Friday. We're back here, not on the lunch hour. You know, it's, 5 o'clock? But it is what it is, you know, so we try to make these shows early enough for you all to come in as you're working, as you're winding down the day. But this is the day really unwound. Anyway, my name is Rob Morales, RCO Network here in Studio 110, Phoenix, Arizona, talking about your finances, your money, and the things that bring you wealth. And who knows what else? It could bring you a life. I don't know. With me, as always, my Sacramento friend, Sacramento Satoshi. Say hello, sir.
What's going on, Robert?
Oh, yeah, there he is. He's big. He's back. He's small, but he's...
I've always been here.
Back. Whatever. So, again, we're here on a Friday talking about finances just because, you know, we come together and that's what we do, you know. And I think, you know, managing your wealth and trying to build your financial portfolio and the things you got going on really helps you and kind of directs your life. And when you don't have a handle on that, you know, as you come to the end of your life or the latter end of that, if you don't have that in line, then you're pretty much financially lost and you have to work at Walmart at 75, which, you know, sucks. And I don't really wish that upon anybody. So Henry and I, or Satoshi, Satoshi and I have come here to talk about some, and maybe be insightful and maybe motivate you to actually get into, you know, the world of finance. Right,
That's
Henry?
right.
Was that too leading? You know, so we named the show, you know, where is the Crypto-Nite? These last couple days, especially the last week, around Thanksgiving, I watch my portfolio. I watch my stocks. I watch recently some crypto because of Satoshi. He pushed me to get that crypto. He's been pushing me every day, and then for some reason, gleefully happy when I actually put some money into Bitcoin. But, you know, we did take a little bit of a hit this week. You know, my portfolio officially as of now, I am down 7.6%, you know?
Wow.
Yeah. That is
last
ugly.
week was kind of rough. And I guess today, I don't know. I was working today, so I didn't have a chance to look at it. But
What the hell, Satoshi? What the hell, Satoshi?
That's what, if you're going to be investing, then you know you're in that's the way all investments work. They go up, they go down, and they're not going to go up in a straight line. If it did, then, you know, people wouldn't be. It's one of the greatest wealth creators is the stock market, so it doesn't come without volatility.
Yeah, and this week, I think, you know, I think I'm a late bloomer. I'm definitely a late bloomer. It wasn't until, you know, I was 40 that I really started actually investing. I did tell myself sometime around like 30, you know, as I was making a little bit more money, and that's when I was previously married too, you know, made a little bit more money. Maybe I should start, you know, working the system. You know, I bought books on, you know, how to put in puts and calls without really understanding the system. I really didn't know where to go. And now that I'm 40, I'm like, I really feel like I missed out on time, you know, investing super early, you know, even now, if you're 20 now and you're investing now, you know, there's a potential for greater yield when you're my age, you know, which is, you know, what, 15 years later, 20 years later. Has that been your experience too, Henry? Don't you wish like you could have started sooner than really rich where you did?
Well, I think in general, that's like most people as they get a little bit older, they kind of feel like, okay, you can kind of get the sense of, okay, one day I got to retire. Maybe I need to start thinking about what I'm going to do. How am I going to save money? How am I going to generate money? And I think when you're young, when you're in your 20s, you're just not thinking that far ahead.
I think I was trying to save like $500 to go to Vegas and blow it out there. You know, that was my mentality.
Well, that's the other thing. When you're 20, you don't have as much money to invest, right? You just want to party and have a good time. But I remember when I was 20, I got my first job, and we had a financial advisor coming around saying, you need to save for retirement. And for me, it just seemed like it was so far away that I kind of thought like, well, all right, maybe I'll just throw in $100 a pay period. He's like, that's it? That's all you want to do, $100? I'm like, yeah, I got other things I got to think about.
Well, like a financial advisor, I mean, their whole goal is to get money in there and they reinvest it. And they basically take a commission off of what they, you know, do for you. You know, you obviously get a return at some point, but, you know, the trades and stuff that they make money off of that too. and it's really no risk to them because they're using your money.
Right. I mean, but they also, if they can get you to invest when you're young,
Yeah.
then of course that's a good thing. You need time in the market. That's basically what it is. So when you're looking at short term,
Yeah.
so you're looking at my portfolio 2 weeks ago was down 7%. 2 weeks compared from the time you're 20 to the time you're 65 is nothing.
Yeah.
So you're just looking really short term. Um, and so what you really have to do is like look a year from now. What did the investments that I made a year ago, how are they doing? This day to day, because people are very, they just go off news. So they hear
Yeah.
things on the news like, oh, there's a new virus. Oh, we got the debt ceiling, and then people get nervous and they want to take risk off the table.
Well, and
That's
in these last couple of weeks too. I mean, I'm watching, my stocks go down. There's only two in the green right now, as far as total gain, and that's scary. If that was my nest egg, if that was the only money I had saved, let's say I threw in a couple grand, and in less than 2 weeks I just lost that couple grand. There is some buyer's remorse there, and somebody like that's on a very strict budget would have lost all that and probably said, "Hey, screw this shit. I don't want to get into this. I don't want to stay in this. I just look at what I just lost, and I needed to use that to pay my water heater or whatever. And the water heater's busted, and I threw it in there hoping for large return or large gain. And I think that's what a lot of people do. They just throw it in there hoping for something to just grow and walk away with 10,000 after just maybe a week in the market. That's probably, I guess, the biggest learning lesson, especially in this volatile time right now, is that you can't always expect it to gain. And these last couple of years, it's all it's been doing is gaining, especially the S&P 500.
Yeah, I mean, it has been basically since 2009. The market in general has just kind of gone up, except for last March
Yeah.
with the whole COVID thing. But yeah, I mean, it would be scary. I mean, wouldn't you be scared if you were getting close to retirement and in 2 weeks you lost 7% of your money,
Well,
right?
yeah.
That wouldn't be very good planning, right?
Yeah.
That's why investing is long term. And of course, the earlier you start, the better. Um, and also your dollar cost averaging. Hopefully,
So,
you're not gambling with all your retirement.
are you buying the dips right now? Are you buying any dips? What hot stock tips do you have right now?
Well, number
Yeah,
one,
you
I
got
didn't
anything?
know that everything was down so much today. Um,
Yeah, it
you know
looks
what?
shitty.
What if
This whole thing just fell apart these last couple of days.
the only thing I bought recently is I bought Solana, but it was in the 180s,
Yeah.
and I probably would do that again.
See, I think I have that somewhere around here.
Um,
Well, so Solana is a crypto. So for all you folks that don't know what crypto is, or are looking into getting the crypto market, this is Solana compared to the U.S. dollar. Solana. Let me see if I can pull back a little bit. Go ahead. Sorry, I didn't mean to cut you off there, buddy.
no, I didn't really have anything to say. I was just, yeah, I kind of, as far as I want to buy more equities. I want to get more stocks, but I don't think it's fallen far enough in general for me.
You think
Like
do
I
you
would
think we're going
love.
to see a bigger crash? Is that kind of what you're saying?
I don't. I mean, nobody. How does anybody know? Nobody knows.
This is why we tune in every week,
General,
Satoshi. We expect the news, the tips. Are you buying the dips? I want to know what I need to buy right now.
I'm looking at things like
uh,
like Tesla. I want to get more Tesla,
Let me pull that up
but for
too.
me, Tesla's not.
Tesla's
Uh,
bouncing around 1,000, and Elon keeps selling his stocks. I think
right.
anytime you see this big sell-off, it's like, well, if the owner doesn't believe in his company or is making the sell, is he just taking profits or is there something else going on? I
Yeah, I
saw
think.
I saw I saw a news article regarding SpaceX, and there is a concern that they may be going bankrupt. I mean, I don't know what the tie back to Tesla is, but that's
Yeah, it
um,
really has nothing to do with Tesla, but yeah, I think well, Elon has to sell for tax reasons, and he's going to sell all the way through the end of December, I think.
yeah.
So for me, I I'd like to see Tesla come down to, if I could get it for $800, that would be awesome.
Well, yeah, I mean, I would
But
too. I think it's just going to
but
tap
I
a
mean, that's
thousand.
what I do. So you're asking what are you doing? I'm just watching the market. The last time I bought Tesla was around $600.
Oh,
So I don't really care if for me $1,200 was kind of expensive, and probably even Elon kind of saw that it was a little frothy, so he's decided to sell.
yeah, and I see that
Maybe
with every stock. I
it could
see.
provide an opportunity for you. I mean, but see, for me, I like to just sit and wait. And again, it helps to do, if you do trend lines on the long term, look at the chart long term and try to do a trend line on Tesla. And for me, that number is right around $800. So if it gets there, great, I'll buy some more. And if it doesn't, then I mean, I still have some. So
Yeah, I think from what I'm seeing, I think you're probably right. Yeah, I'd say about 818, 820 from the. Or, let me just put this up. Son of a gun, Satoshi. So around 812, is that kind of where you're anticipating around this?
yeah, for the most part, that's kind of what I'm seeing too, right along that. So I like to buy, when I buy myself, I like to buy on dips, and I like to look at long-term trend lines and buy at the bottoms, because it helps in these situations. Because if you're buying at $1,000 and $1,200,
Yeah.
then of course you're gonna be watching it more closely, and then when you have these big down days, you're gonna be nervous and feeling bad because I lost this, I lost that.
Well, yeah,
But if you
and
buy
people.
it when it's 600, then I don't care if it was 1,200 and it goes down to 900. It doesn't really bug me, because for me, you got to have, when I'm buying something, I want to have conviction in the company.
Yeah.
And for me, I see Tesla in the future. A lot of people driving Tesla cars. I see it as the future. So I don't want to hear anything about it unless there's a huge dip. And the news will tell you. Then you'll hear like, the stocks are down, and then that will get me interested. Okay, let me start looking at this.
Was I your news today? Stocks are down. You're like, oh shit, I haven't checked today.
Yeah, kind of. Well, I was also working, so I was kind of busy.
Yeah, that work crap gets in the way all the time.
Gets in the way. Yeah. That's why we're investing, so we don't have to work as much.
But when people talk, and I think when people hear that, make money as you're sleeping, this is kind of what we're talking about. I mean, this really has, other than your kind of quasi-active involvement, I mean, active as much as you want to be. I mean, there's people who trade on the hour, there's people who trade on the minute, there's people who trade on the day, and people who trade on the month and year. I don't think people trade on the year, but but there are people out there that will think short and long term. And it's not something you should necessarily manage every minute unless that's really your career, or at least that's how you're making money. And it's really like buying stocks is just investing in a company. And as long as you believe and know more about that company, the better it is potentially for the stock. And it's almost a portion of a business. That without owning one, without establishing one, without going and buying a restaurant and trying to start a fast food place. That stocks are an easy way to own a company and watch it grow without any involvement in it.
Well, there's all different kinds of investors. So for the most part, most people are not kind of watching it, and they don't really have either they don't have the time or don't have the desire to try to learn, like, when should I buy. So for those people, dollar cost averaging is going to work for them. And you're going to do that with, every paycheck, I'm going to contribute a certain amount. And most people will just do like an index. Let me buy all the stocks. Okay. And then there's this argument of, even Warren Buffett will say, like, people who buy index funds are for people that don't know what they're doing. And that's okay. 'Cause that's better than not doing anything. Right. It's like you said, you don't want to be 65 and then realize, like, oh, I didn't save enough. So dollar cost averaging into an index fund is better than not saving any money, right?
Yeah.
So you want to do that, and then there's an argument of dollar cost averaging an index versus, doing a little bit of research, finding companies that are going to be the future, and then going heavy into those companies. Like for me, Tesla is one of them. Google is one of those.
Yeah.
I just have a lot of conviction in those names. I have a lot of conviction in Ethereum, Bitcoin. Those are four. If you, um, there's it's just a different way of investing. Some people will find these high conviction names that they feel like are the future. They learn a lot about them,
Yeah.
and then they just invest whenever. Just tell me when the market's dropping 1,000 points, 2,000 points. Then I'm going to go back and buy my conviction names. Are they dipping? Are they cheap? Because I want to put more money into those.
Yeah.
And that's just a different way. And then there's other people that are, and there's a lot of people that in the last, like you said, since 2009, everything's gone up. So people just think like, oh, I'm an investor. I buy this, I buy that. And then when you have a down market, it's like, okay, what happened to your investments? I thought you were so into it. Oh, I lost, it went way down.
Well, it's because
I see that too.
I think the average person, again, buys in on the rumor. They don't know what they're doing. It's really kind of daunting. I mean, if you pull up a chart like this, it's like, well, how the hell do you read that? Well, there's no reading necessarily. It's just informed education. Informing yourself and educating yourself through a process. And all these lines, all they do is just kind of give you a reference point, or at least somewhat of information of where a stock price is going. The more lines, the better. But at the end of the day, it's your decision. What one line to one person is a different line to somebody else. Especially with the company, especially like something like Bitcoin or cryptocurrency. That's very volatile. So you see that fluctuating a lot more than something like a Tesla. And so I think people's biggest mistake is just to kind of throw in money just because their cousin or their uncle said, hey, I invested in Tesla. You should do that too. And then they throw their money on the high, and then all of a sudden the last month it just sells off. And it's like, well, that was stupid. I'm not going to listen to my uncle anymore. But it was just done in ignorance, and ignorance meaning just not informed. And again, these lines can be very daunting, and it's really not. It's just like I said, it's just indicators and lines that show you kind of where things are going. And so the end of it is a decision you have to make whether or not you want to purchase and sell. This whole thing is very simple. It's like having a yard sale. You bought something at some point, and now you're selling it. You just hope to buy it cheap and hope to sell it expensive. And you go back through and do it again. And that's an active trader. If you're a long-term investor, you're just throwing your money in a company that you trust and hope it grows over time. Coca-Cola is a safe company. It's been around for 100 years, and it's stagnant. It grows a little bit, I guess. And that's a little bit safer. Bonds are a little bit safer. There's a few things out there.
Right. Well, but so there's a couple different things. You're talking preservation of wealth versus making money. So,
Yep.
So Coca-Cola is more preservation of wealth. If you got a lot of money and then it's like, I just want to keep up with inflation, then you're preserving your wealth. But if you want to make money so that you can retire, then that's
A whole different
then you
thing.
have to take a little more risk. So that's more like a Tesla kind of and a Google kind of thing.
Well, and I would say the risk is more in the decision. When do you make it? I mean, would you buy Tesla right now? Not a financial advice, by the way. We're not giving financial advice.
Well, just for me. So there's two kinds of ways to evaluate something. One is fundamental analysis.
Yeah.
So that's looking at a company and saying, okay, how much money do they make? How much money do they owe? What is their debt? That kind of stuff, and and what is the valuation? Like for example, MicroStrategy. That's another
Let me pull that up.
investment that I have, and you can look at it and say, okay, MicroStrategy. On a fundamental basis, the company is worth $1.2 billion. It holds a certain amount of Bitcoin. I don't know offhand. I think it's around 122,000 Bitcoin. What is the value of Bitcoin? Multiply their 122,000 Bitcoin times the value of Bitcoin, and then see what you come up with. And I sent you something last week, and it said the stock should be around $750 or $780, and it was trading around $680. So on a fundamental basis, it's undervalued. Okay, so that's one way to analyze something. The other way is to do it through technical analysis, and that's like the charts that you're talking about.
Yeah.
But like you said, a chart just tells you what happened in the past. So it's not gonna predictably tell you. Like a lot of times, I have like people who are interested in investing. They'll say, "Oh, can you look at the chart and tell me if it's going to go up or go down?" Well, okay, I can look at the chart. And it'll tell you what happened in the past, but that's just like the even when you go to when you go to anything in finance, they say past return is not indicative of future returns.
Yeah.
I mean, you cannot guarantee that just because it was on this trend line before that it's going to do it. But there is there's just a lot of correlation with people coming in at a certain price. And so there is some herd mentality along with investing.
Yeah. See, like right now, if that price point is around the, would you say 740, whatever price?
What are you talking, MicroStrategy now?
Yeah, MicroStrategy. Yeah. Because right now it's 630, which potentially, again, these series of lines and all this information, especially what Satoshi's providing, could be an indication of maybe I should buy now. I mean, for what I'm seeing, there's not necessarily a reversal here. There's some support on the MACD. I mean, it's on the bottom end of the Bollinger Bands. It's below the 200. So there's a lot of things that you want to take into account. But like I'll give you an example. I took a little bit of a shot on Celsius. It's an energy drink company. I drink Celsius, so I saw the stock dip a little bit, and before there was a reversal on some of the indicators, I ended up buying some, and I'm like, not necessarily regretting it, but it's not reversing. That's for sure. This is Celsius, like I said, it's an energy drink company, and I kind of saw this kind of coming down. I saw a lot of pushing up on the price a little bit, and I'm like, I'll just throw it in there and see if I get in early, and if I take a chance, I might get in early. If you pull back a little bit, it's well below where it was heading before. You can kind of see it was trending up for the longest time. It's been trending up since November.
Is that purple? So the purple line is the 200-day moving average, I'm assuming?
Yeah, that's my 200-day.
Okay, I don't know anything about Celsius drink or anything like that. So you decided, okay, technically, and I haven't looked at the chart either, but you said I looked at the chart and technically I decided that that this is something that I wanted to buy, and now your thesis is not playing out, right?
Correct. Yeah, I mean, I bought maybe 5 shares to see, hey, if I buy in this time, maybe there's a chance there's a huge reversal. I mean, look at the indicators; they just completely shut down. It broke the trend a little bit, and maybe I could bring back. Maybe there's a tremendous bounce back at some point. Maybe it's like a Bitcoin stock, and then it shot up, the next day. But I didn't put it in. I didn't put a large amount in there to like completely throw off my portfolio. I bought 5 shares, just for fun, just to see if it went.
So you're doing a little bit of gambling, and that's okay. That's fun, right, for you. But then you have to consider, like, if I'm down 5-10%, most people, if you're feeling like technically I think this is the bottom, and then you lose and you go down 5%, then your thesis was incorrect.
Yeah, I'm down 12%.
But
it's 5 shares. It's just 5 shares. What am I?
Yeah. So for you, that's just a gambling thing, and it's like,
oh boy.
It's like going to Vegas and playing blackjack, I guess. I don't know.
You know what I want to do? The real thing is like, hey, I'm going to buy this, and then I'm going to tell Satoshi next week, like, look at it, it shot up like 40%. I'm going to cash out now. But that's kind of what I think everybody wants to do. It didn't play out that way. So I didn't play out right here on the air. So there could be a chance, give it maybe a month, give it maybe next year. Maybe it shoots up 40%, and I can come back and say, hey, that Celsius stock I felt stupid about? Guess what? It made 40%. But again, I bought a small amount to kind of, again, gamble, see where it goes at. It was kind of meme-y, stockish a little bit. And I figured, what? If there's a huge reversal, I win, I cash out, then I call it a day. But I didn't put a lot in there to really, hurt me in any way. And then at the end of the day, I still have the stock.
You recognize that this is kind of far off on the risk curve for you. So you're not gambling a whole lot of money. You're just kind of doing something that's just for fun because you're just trying to learn.
Correct.
That's what that's
correct. So don't put money in this whole thing if it's like your retirement. Don't put this money in if you need it for the kids' baby food. This isn't the kind of stuff for that. It's about learning and about making mistakes, just like anything else. This is like me with training wheels, trying to ride my bike. That's really what this comes down to. And then since we're almost at the end of the show, we're about 5 minutes out, sir. Do any of these numbers, reports, unemployment numbers came out today, and I'm gonna put that up real quick too. Does any of this stuff impact you at all? I mean, if you're doing TA, if you're looking at companies, does any of this stuff kind of impact you in any way, or do you have a reflection about any of this stuff?
Let's see. What does it say? Unemployment rate declined to 4%.
Yeah.
I don't know. To me, I think, like, as far as macroeconomics, I think that the government has kind of painted themselves into a corner a little bit.
Yeah.
Like they've artificially put a lot of liquidity in the system. Okay, i.e., they've printed a lot of money and thrown it out there and given it out to everybody. So whenever you do that, you can get this frothiness in certain aspects in the housing market, the stock market, or whatever. But I don't. The economy to me doesn't seem like it's booming that great.
Well, it seems that way to me too. And when I hear news like this and people talk about that, when I heard the unemployment number, because it came out like about 2 hours before the stock market opened, and I anticipated there would be a reversal in a lot of key areas in the stock market. I figured it would be more of a green day. It was just another bear day, another red day. Thinking that some of these stocks that I saw would go up, because a lot of the stock market is emotional. It's emotion. People buying on emotion. Because there's no indicator that says, oh, right now is the best time to buy because, in 2 weeks it's going to shoot up 20%. There's no way to do that. There's indicators that kind of show a probability that would happen. But if Bitcoin, if you trade Bitcoin or crypto, that's not the case 90% of the time.
Well, the thing with crypto...
we'll end it with crypto, just for the Satoshi.
Just for me.
He is a crypto guy. If you didn't notice, he's got a crypto hat just behind him. Bitcoin.
That's right. No, I think it's so Bitcoin and then other cryptos, I guess, have kind of been in these cycles, in these 4-year cycles, which were tied to the halvening events, where people who validated or who kind of had Bitcoin. They're called validators, right? So they're checking transactions. The amount that they get rewarded or the amount that gets mined every 4 years was getting cut in half. And so you would see these waves or these patterns every 4 years of increase in price and then dips. And I don't know. So a lot of people just feel like maybe those cycles have maybe they're not as relevant anymore. I don't know.
Yeah.
But again, that's also short term. I honestly believe that long term, and when I mean long term, I'm talking like 5 to 10 years.
Yeah.
Okay. So if you're going to invest in crypto, then you're looking at a 5 to 10 year investment. And I had this conviction last year. So for me, I got in a little bit earlier than where it is now. So I'm not as concerned about the short term up and downs. I've kind of placed my bets, and unless I see like a really big sell off or something, then I might get more interested in buying a whole lot more.
We're at 53.2, Henry. We're 53,000 on the Bitcoin, and it's falling. I'm watching it. I'm looking at the minute chart. It just keeps down on the Bitcoin.
Okay. Well,
I saw the price of Bitcoin fall, and this is based on my my limited information and experience. I went in and bought at 54 last week, thinking it was a dip. I was rushing. I was like on my Webull account trying to throw another $2,000 in there so I can just throw it in there, just because I saw the Bitcoin.
And you got it at a good price. You had it at what at the time was the low, which was like 53 something. So,
yeah, and the good thing about Bitcoin, I don't have to buy a full Bitcoin. I don't have to spend. I bought parts of one. I bought a few Satoshi.
Right.
That's right.
I mean, and remember there's not a whole lot of Bitcoins out there. There's only 21 million ever, but a lot of them are lost or locked up. So in reality, there may only be like 14 million Bitcoin ever.
So the question of the
The
day.
reality that you'll ever have one Bitcoin, there's only going to be like 300,000 to 400,000 people that ever have one Bitcoin. So if you're one of those people, then then it's pretty rare. But so you're just accumulating to try to. And I told you maybe the goal should be to try to have like a quarter or a half if you can get there.
I'm working it. I'm working it, Henry.
Right, and the way you get there is you just buy on dips over long terms.
So the question of the day, as we wrap up, because we're way past the time, we're just, we're a show, we can't be on forever. I want to have you here, and it's just the way it happens. But the big question today, 100,000 by the end of December. Yes, no. Shotgun. Yes, no.
Very difficult. I would say no.
Oh, there goes all the YouTubers hating you now. I was hoping for 100,000. That's why I threw in at 54.
How about I'll go 100,000 maybe by March. Let's look at March.
Oh, shit. There's we have this recorded right now. We're recording 100,000 by March by the Satoshi. So if you're a Bitcoin hodler, just keep on hodling. Not financial advice, not what we're here to do. We're just here to entertain because we're a bunch of YouTubers. And as Henry turns into Dracula because their lighting is, I don't know, is it, what's going on over there?
Yeah,
tornado happening?
I didn't turn on any lights.
He is in the Sacramento area.
Just log on. So I'm like, all right, I'll log on.
Oh, shit. So anyway, we're going to be wrapping up today's show. So I thank everybody for joining us. For the people watching, hopefully we provided information that'll help you. We're here to help. I know Satoshi makes himself available. If you want to leave a comment or question in the comment section, we'll get back to it next week. So thank you all for joining us. Henry, Satoshi, catch you what? Next Friday. All right, buddy. Hang in there.
All right.